If I took away every indicator from your chart right now and left you with nothing but price, would you still be able to find trades? The truth is, most traders overcomplicate trading until they learn a simple approach. They fill their charts with as many indicators as my exes, signals for fake gurus, and fancy expert advisors. They completely ignore one of the most powerful concepts in all of technical analysis, and that is support and resistance. In fact, if you learn how to trade support and resistance correctly, you'll understand where buyers are likely to enter, where sellers are likely to take control, where price is likely to reverse, and even where breakouts are most likely to happen. Today, I am giving you the complete support and resistance guide at no cost. By the end of this video, you'll know exactly how to draw support and resistance levels, how professionals use them, the mistakes beginners make, and how to turn these levels into actual trading opportunities. So grab a crayon and book because this is one of the most important trading lessons you'll ever watch. Let's get into it. Definition of support? Support is a price level where buying pressure becomes strong enough to stop price from falling further. Think of support as a floor. When price falls and reaches this floor, buyers step in and push the market back up. The more times price reacts from a support level, the more significant that level becomes. Imagine price falling into a support level 3 or 4 times and bouncing each time, compared to falling into a support level 5 or 6 times and bouncing each time. A level with 5 to 6 touches is stronger than a level of 3 to 4 touches. Definition of resistance? Resistance is the opposite. Resistance is a price level where selling pressure becomes strong enough to stop price from moving higher. Think of resistance as a ceiling. As price rises into that ceiling, sellers begin entering the market and pushing price downward. The more times price rejects from resistance, the stronger that level becomes. So, in a few words, support acts as a floor, resistance acts as a ceiling. Understanding how to properly draw support and resistance. It is recommended to draw support and resistance as zones, but think of how messy your charts will be if you're required to draw zones for H4, H1, M30, and M15 at the same time. I found a quick fix for this, and it's by drawing these levels in form of horizontal arrays. Let me explain. For the case of resistance, first draw a zone around your area of resistance, then polish it with a horizontal array. Drag it down till it touches a high by body while making sure it touches at least one of the last 2 highs before the break. For the case of support, first draw a zone around your area of support, then polish it with a horizontal array. Drag it up till it touches a low by body while making sure it touches at least one of the last 2 lows before the break. The best time frames for support and resistance. One of the biggest mistakes traders make is thinking that support and resistance work the same on every time frame. It does not. The time frame you choose determines how significant those levels actually are. Here's the rule I follow. The higher the time frame, the stronger the support or resistance. Think about it. A support level that's been respected on the daily chart represents days or even weeks of buying and selling. That's a lot of market participation. Compare that to a level on the 1-minute chart, which might only have existed for a few minutes. Which one do you think institutions care about more? Usually it's the higher time frame. For swing traders, the weekly and daily time frames should be your foundation. These charts reveal the major levels where institutions have previously stepped in. If price reacts at these areas, the move often carries much more weight. If you're a day trader, your best combination is to mark your key levels on the 4-hour and 1-hour charts, then use the lower time frames like the 15-minute or 5-minute chart to look for your entry. This gives you the best of both worlds, strong higher time frame levels with precise lower time frame execution. Here's where many beginners go wrong. They draw support and resistance only on the 5-minute chart, called trading one time frame. The problem is that the 5-minute chart is full of market noise. Price constantly creates tiny highs and lows that don't really matter. As a result, your chart becomes cluttered with lines everywhere. How to trade breakouts. Support and resistance aren't just useful for spotting reversals, they're also powerful tools for trading breakouts. A breakout happens when price finally pushes through a key support or resistance level after testing it multiple times. Once a breakout happens, don't rush into a trade immediately. The exception is when the breakout is confirmed by a strong candlestick. For example, a bullish engulfing candle breaking above resistance, or a bearish engulfing candle breaking below support. These are considered valid early entry signals because they show strong momentum behind the breakout. If you don't get that engulfing confirmation, the safer approach is to wait for a retest. After price breaks above resistance, that previous resistance often turns into new support. If price retests that level, you can start looking for buying opportunities. Likewise, when price breaks below support, that old support often becomes new resistance. If the retest happens, you can begin looking for selling opportunities. 3 common mistakes traders make. Even if you understand support and resistance, these 3 mistakes can quietly destroy your results. If you can avoid them, you'll already be ahead of most beginner traders. Mistake number 1, drawing too many levels. This is probably the most common mistake I see. Many traders mark every support and resistance level they see until their chart looks exactly like a spider web. Here is a quote: "When every level looks important, none of them are." Instead, focus on the strongest and most respected levels for each time frame. Keep your chart clean and only mark the levels that price has reacted to multiple times. Simplicity almost always leads to better decision-making. Mistake number 2, entering without confirmation. Never assume a level will break just because price has touched it. Always wait for confirmation before risking your money. If you're looking for an early entry, wait for a strong engulfing candlestick. If you're trading a breakout or no engulfing candlestick, wait for the break and retest before entering. Let the market prove your idea right before you commit to the trade and risk your daycare money. Mistake number 3, ignoring higher time frames. Not all support and resistance levels carry the same weight. A level on the daily chart is usually much stronger than one on the 5-minute chart because it's being respected by many more market participants. My final thoughts. At the end of the day, support and resistance are not fully guaranteed. Nothing in trading is. They are high-probability trade technicals that, if understood to the core, could turn the tables in your trading. Mastering this skill can dramatically improve your timing, entries, exits, and overall understanding of market behavior. If you watched till the end and found this guide valuable, hit the like button and subscribe for more educational content like this. And if you don't know yet, I am bringing together traders from all around the world. I want to build the biggest community of traders and provide for them as much knowledge as they need to make it in trading. So if that sounds like something you truly want to be a part of, I've left a link to my free Discord along with the link to my highly recommended broker in the video description below. Drop your comments and let me know how I did. Thanks for watching, and I'll see you in the next one.